Good morning, traders. We are doing pre-London Open analysis. We are on Monday, 9th of January. So officially second week of January has now started. So before we go into any detail in terms of the charts, let's just take a look at the diary for today. And let me just restart the diary and put it on the 9th. All right, let's do it again. Fantastic. All right, cool. So today is 9th of Jan, and we can see that there is not a lot of news scheduled, neither under the orange folder or the red folder. So we have JPY bank holiday, but obviously that doesn't really relate to us because we do not trade JPY pairs. Maybe it will have an impact overall on the markets, I don't know, but generally speaking, it doesn't really, so it's all good. We have to take into consideration that we have CPI release on USD. We also have CPI release on Aussie dollar, which is fine in terms of Aussie dollar, but obviously the most important one for us is USD. And we also know from last year's experience that CPI data is actually as meaningful as non-farm payroll in terms of volatility, if not more volatile. So obviously we need to wait and see what is going to happen in terms of that. Up until then, the markets may be slow. The markets may even be slow for the whole duration of January. So just bear that in mind. Remember, it's a new year. And the investors are waiting for the data to be released. They are waiting to kind of establish what is the state of each country. We are talking about, currencies here. And it may take some time for some long-term movements, or it may just kind of slowly start picking up each week. But let's consider certain things. So, for instance, on Wednesday morning, on the day of the CPI release, maybe the markets may not be as they may not be full of volume. Essentially, that's what I'm trying to say. So, let's just bear those things in mind and manage our expectations. So this is what's happening. Tomorrow we have some news, and for the rest of the week, but today is nothing. And overall, it's a CPI week, so we know that, and that's absolutely fine. Now, Euro USD, this is where it is at. But before we look at anything else, let's have a look at the weekly. In terms of weekly, so I can see that here we have a few drawings that shouldn't be here. I can delete them for now because we can redraw them very easily. So it's absolutely fine. Essentially, what we are seeing is that the price here was obviously trending to the downside, and we have highlighted last week potential reaction zones, and we have highlighted as well as that obviously our highs and lows and where we are expecting for the price to be. Now the price is at one of the swing highs. That leg overall was already mitigated here, but the point of interest was not, and this is where we experienced reactions here, and this is where we have experienced reactions here as well. In terms of weekly, apologies, we had a break of structure over here. This was the last high that was driving the price to the downside, which was an efficient high as well. And we had that break. After any break, we anticipate for the price to correct itself. However, because it is weekly, price does not have to correct itself. Ideally, it would. But if we look at previous data, just to mention again, here, we had price also breaking the structure to the downside and leaving the high and the low unmitigated before it continued moving further to the downside. That has not been mitigated until from 2018 to 2021, until 2 years later. So in terms of weekly, don't anticipate that price should do X, Y, and Z. It takes months, weeks, even years sometimes for certain things to happen. So we just want to obviously acknowledge what is going on. But at the moment, what we can see and what we're acknowledging is that we had trending market to the downside. Now the sentiment has changed because we have broken weekly high. We do not have, however, at the moment any pullbacks, but then this is where lower time frames are going to help us to identify certain things. Now, In terms of daily, looking at things, we have a little bit of a similar scenario in a way. What we had, of course, is also price breaking the structure to the downside, pulling back, breaking the structure to the downside, pulling back, being inefficient, leaving orders open in this premium, then coming back into that premium and breaking the structure again, pulling back into the premium again, breaking the structure again, and so forth and so on. This was our last high that was driving the price to the downside and broke the lows. So here we had the lowest point in the market. Here we had the highest point in the market. Price was efficient because it was coming back into the premium of the last leg. It picked up more orders and then sent the price down. As it sent the price down, if of course had given us a premium and discount too, price then came back to premium into the point of interest and moved down. However, that move did not sustain, did not take the lows out, and price, especially on 4H, started changing sentiment, slowly telling us that the sentiment in the markets is changing. However, even then, when we came back to the extreme, we had further reaction, but then as we can see, we were holding that trend up on 4H, and now on daily here, everything's mitigated. So all of this below is our liquidity. So everything's nicely mitigated down here from 4H perspective as well. So when we are now looking at the markets, we would be more looking at it from the perspective of, okay, so what is going on here? Overall, this is the low and this is the high that took out the daily high and took out the weekly high. So in terms of swing, we have swing low and swing high here. Then price pulled back, but of course it did not pull back into discount areas and then continued breaking the price to the upside. It pulled back again, did not come back into discount areas, so price is still inefficient, but then broke the highs again. Now those are minor breaks to the upside because the price is not efficient, so it's not our swings are still here in terms of daily. Of course we will have internally here swings on 4H and 15 minutes, but from daily perspective we are not efficient. In order for the price to regain efficiency, the price would have to come back into discount, which it did, and then take those highs out. So now if the price will take this high out, we will have efficient order flow on daily, and we can assume that perhaps the trend on daily will just continue moving to the upside. Okay, at the moment what we are looking at in terms of 4H is that 4H actually did have efficient order flow. So similarly with price action down here, again, if we zoom out, like we said, in terms of daily and weekly, daily and 4H, here we have our liquidity. Everything's really nicely mitigated, so we can leave that visible on those time frames to remind us that all down here is just liquidity. Everything's really nicely mitigated on daily, on 4H, perhaps on 15 minutes as well. Then we had further moves to the upside on 4H, and we can see that we have some unmitigated 4H areas, and that aligns as well with weekly discount, it aligns with daily discount, and it aligns with 4H discount as well. So that is fine. We know that this area here and this area here are high probability areas where we have a lot of orders left. However, because those are weekly discount zones, it may take time for the price to get there. So that price may never, not never, but it may not get there for a long period of time. So then on 4H, the price, as we can see, broke to the upside and then pulled back here. It did not even pull back into the internal because we had the overall price just breaking the highs, and then we broke it down into two legs as well. We were anticipating for the price to come back into this point of interest, but it never did. It created liquidity above it, and then it continued moving up. So what we can see essentially is that the price started breaking highs. Now, in terms of swing highs, this would be our swing high. So we have our swings there, but we had to break the price down on also internal level. So if we're looking at the swings, price continued to move up. They did not come back into the discount of the swing, because the swing would be swing low, swing high, then continued to move to the upside, then it came back to discount, and now you would have to become efficient again, which kind of aligns with a daily. So we had to break it down into internal structure on 4H to fully understand what is going on. Here was a driver internally that was moving the price down, which was also 15 minutes swing point. I remember that. And then eventually we took it out. As we took it out, we came back into the discount of from this low to this high, picked up more orders, and then took the high out again. As we took out the high out again, we created the low, we created the high, price pulled back, but it did not pull back into the discount. Therefore, orders potentially are open there. The reason why it's not highlighted is because we are mitigated, not fully mitigated, and we did not want to kind of have too many levels on the charts, because as the price here created the low, created the high, did not pull back into the discount, meaning it was inefficient, but it continued breaking the highs. As it broke the high, and to become efficient again, it would have to come back into a discount of this low to this high and break the highs again, which the price did. It came back to the discount, took out the highs again, meaning the price was efficient. And for that reason, we then had this low and this high highlighted as our, well, actually this high, apologies, because the pullback began here, as our swing structures in the markets. Now, we do have this swing low and this swing high in terms of 4H, but we also took into consideration the internal before, and this is the reason why price came back here, and maybe some buys were considered at first for continuations up. But eventually and essentially, what you were waiting for at the start of last week was for the price to come back into this point of interest, which from this low to this high, we have our premium and discount. And this is the first. Actually, let me put that back in. This is our first point of interest in our discount, and for that reason, we were looking to buy from there. And as we can see, price came back into the point of interest first. It had given us a reaction, but then it wanted to come back to those extremes of this point of interest, which it did, and then it reacted and moved up. As it moved up, it respected the premium of this high and this low, which was also on 15 minutes swing high and swing low, and then moved further to the downside, taking those substructural lows out. But overall, we knew this is our swing and the 4H point of interest. And during news, during non-farm payroll, price came back, capped our point of interest in our discount, and continued to move up. So we had some areas here which we are going to go through in a second, but what we are seeing that this liquidity has been taken out, and what we can see is essentially that we have something similar to change of character on 4H. We had change of character down, and now we have change of character up as well. We also knew that there was plenty of liquidity sitting around those highs. There's plenty of liquidity sitting here as well. So all of this here is liquidity in our eyes, and there's potentially a lot of liquidity here as well. So nevertheless, this was our, this was our swing low that has been respected, and this is our swing high. And overall, we are anticipating for the swing high to be taken out because the price is efficient in terms of 4H, and it's trending up. So here I can delete this premium and discount now. Here I can delete this liquidity as well. And here I can delete this as well. So what we are seeing is that the price had given us a change of character. So now, where is the price coming back to, which is also important? And also here, I want to highlight to you that we had discount internally on 15 minutes too, and that has been addressed. The price maybe did not come back specifically to 15 minutes point of interest, which is fine, but it did do what we kind of were anticipating for it to do. Here, when time gets to it, we might pick out some orders, but at the moment, we're not too concerned about it because the price has regained its efficiency. It had picked up the orders as we anticipated it to. It did not tap into the refined 15 minutes, which is fine. Price doesn't always have to do that. So this is what we're anticipating in terms of 4H, we're anticipating for this high to be taken out. Now, let's see how he aligns with 15 minutes. So if you remember on 15 minutes here, we highlighted to ourselves the breaks of structure to the upside. We then identified that this low was the last low driving the price up in a significant manner. Then that low has been taken out, and not only that, it was also mitigated. So from this high to this low, price came back to the premium, to the nearest point of interest, picked up more orders, and then moved the price down. The rest here is very clear that is liquidity. Okay, so all of this in our eyes is liquidity, and I'm not anticipating to trade from anything from it. We of course may see some reactions, but I am not personally interested in any of those reactions. Okay, then the price though picked up more orders. So this was the high. This was the high that was driving the price down, because remember, this was significant low, this was the high, then that low has been taken out, telling us there is a change of sentiment where sellers are taking control now. Then this high drove the price to the downside. After it drove the price to the downside, it came back from this high to this low to the premium. It did not tap into our points of interest, but it came back to the premium. It kind of swept this 1 minute point of interest. I was altogether anticipating for the price to come back here. It never did, and it just gathered a lot of liquidity there. It was not tradable sales for me, but price did come back from this high to this low into the premium, and then it broke the structure further to the downside, making it this our swing high, the highest point in the market, and making it our low. Okay, then what we had drawn is this discount, premium and discount, premium, discount, anticipating for the price to come back into those highs. But what we can see is that then the price further took out the lows, then it came back into the premium, regained its efficiency, then it came back again into the premium. It continued doing that before it tapped into our significant area in the market. And then what we can see is that our main swing from here, so now I'm going to change it about. So this really can stay on hourly, but not on minutes. And on daily, weekly, monthly, we can take it off. So this is just 4H chalk. So here as well, we're going to take it off, just leave it on hourly. But essentially for us, what's important is that we are seeing here a break of swing structure to the upside. So this is a break of structure up. Okay. Now, of course, price regained its efficiency here. So the first sign of price actually changing the sentiment was that was efficient. Let me just check if this was efficient. This high, this low. Yep, it was. So the first sign, very first sign, was this. So when we took this high out, so we had a break of structure up here because price regained its efficiency. This was our first sign that price is changing the sentiment. And then as we can see, price did change the sentiment. And then from this low, and after the change of sentiment to this high, it came back to the point of interest, tapped it, the edge of it, picked up more orders, and then continued breaking to the upside. So we then have internal structure breaking to the upside. And as we have internal structure breaking to the upside, we also have this swing being taken out. We can delete this. We knew this is all liquidity. We can delete this now. We can delete this now as well. So here, going to wait for the price to develop to show us if the prices are going to hold. The price is coming from 4H point of interest that is running efficiently and might be filled with strong buying orders. So we were aware that even though 15 minutes is running efficiently to the downside, and this was highlighted on Monday, if we tap into efficient 4H point of interest, this might be wiped. And this is exactly what we are experiencing here. It is getting wiped. So at the moment, undoubtedly, we are strong buy buyers. Okay, so we are running efficiently again. So weekly, we change the sentiment, but obviously we have not pulled back into the discount. On daily, we have changed the sentiment. We are inefficient, but we may become efficient if we take these highs out, and that will be shown to us at the end of today if we are going to close above this high. If we are going to close above this high today, we are going to have efficient order flow to the upside on daily. In terms of 4H, we were anticipating from last week for these to hold, and let's just highlight why the price held where it held. So over here, what do we have? So we have 15 minutes, and this was also the last inefficient. So price just came back to the edge. There's not 15 minutes point of interest to kind of align with what we want to see, which is absolutely fine. We could have something here, but price didn't even come back that deep, so that's all right. But price overall came back to the discount of this big push, and the reason why it was significant is because it took out at the time a swing high. So this was the swing high and swing low, and the price came back not only to 4H point of interest, but also into a discount of the swing leg of 15 minutes that was also still filled with orders. So now we're just going to leave that on a minutes time frame, just for reference, if we want to remind ourselves why the price did what it did. So we are definitely buy bias, and then now let's establish a few things. All right, so let's see what's going on. So overall, I'm going to delete this at the moment. Overall, we have the low and the high. All right, this is what broke the structure to the upside. This is what broke the structure to the upside. What's this pullback though? It's 8 pips, 9 pips. Therefore, we are going to take into consideration the whole move. So at first, what we always do, we want to identify just the swing leg, the push leg, the whole movement. This is our whole movement. Obviously, we are seeing that we have our further point of interest down here. Now, the only thing I am concerned about in this point of interest is that we did not fully get back into this point of interest here, and therefore this might be filled with liquidity. So maybe I would prefer to see a sweep there, but at the moment that is absolutely fine. Now, even though we have this all big leg here where we would want for the price to come back into discount, we also potentially will have to break things down a little bit more. So here we've got that shallow pullback, which is absolutely fine. But then what we are going to consider it as is just as minor break of structure to the upside. We just have to consider it because that's what the price did. We're not saying anything about what's swing, what's not. We're just considering and following the price. Then we can see that further break happened here. Okay. Hold on. And then what we can also see that further break happened here. All right. What we can also see that potentially all of this is just filled with liquidity, and we have to be wary of that. Okay. So one thing that we want to highlight is, all right, so the price here came back to discount. Yes, it did. All right. Price here came back to discount. Yes, it did. Did price here come back to discount? No, it didn't. So we may have something open there like this. So really what I would do, I would highlight this wick, and then I would highlight this point of interest like that. And then here, the price broke the high again, pulled back. Did it come back to discount? Yes, it did. Broke again. Will it come back to discount and continue up? Well, we will see. Now, one thing is, when the price is trending up, it will come back into the discount, into the equilibrium, and then continue to move up. But that also creates a lot of liquidity. So this is our liquidity trend line is sitting. I honestly am seeing as all of this as liquidity trend line. But at the moment, we have to also consider that this here is left with some open orders. So instead of doing a deeper pullback, the price may just do a shallow pullback and continue up. But let's bear in mind that overall, we would want for the price to come back into a discount here. But if the price is going to do that, well, we will see. Obviously, to be fair, all of this is liquidity. We will see because obviously it was non-farm payroll. So the price will either correct itself or continue up, which is very easy to say. It's either going to happen this or that. But really, people will be anticipating pullbacks. where in reality the price may just continue up. So obviously we are reacting to something here, and we are just reacting to this big wick. To me, obviously we can see we have a lot of liquidity potentially sitting there. This wick maybe has been unmitigated on 1 minute, so let's actually have a look just if we can gain some clarity from that. It is all Asia session, I can see. No, it's actually in between Christmas. It is Christmas, just before. So here we have that break to the downside. So we have high and low. Price came back into the premium, but it did not come back into the point of interest. So potentially this is where the orders were still open and this was filled with liquidity. So let's just have a look at that. If that is the case. Yeah, so this is what the price is reacting to. That's absolutely fine. However, I'm not seeing this as tradable area where I am thinking, right, this is where I'm selling from. I'm not selling from anywhere here until I see the sweep of the high. So I'm not saying the price has to take this high out. It should, in terms of 4H, because we are running efficiently. Of course, we have a little bit of contradiction because daily and weekly and it's not efficient yet, blah, blah, blah. But overall, I would be looking for the price to take this out. At the moment, yes, we are reacting to an area that, you know, was open with some orders, which is absolutely fine, but I'm not looking for the price to turn around from anywhere here because it's just not strong enough for me. Of course, the price may start now pulling back. That's absolutely fine, but this is not a tradable sell to me. Now, let's see what the Asia's highs and lows are saying, and we can see that our unmitigated area that is open with orders is our Asia session low. So I would be looking for this to be swept. So this is definitely filled with liquidity because this here has been left with open orders, but there is definitely liquidity there. So I would need to see a sweep to consider continuation buys from here. Also, I'm bearing in mind that price may want to come back all the way to discount here. So if you were gonna to give yourself a shot at this trade, I would say give yourself maximum 1 to 2 shots, because if this is not going to hold, then price potentially wants to come back deeper. Maybe the price will come back into a flip, but to be fair, there is not much interaction there. Price may come back, you know, to a lot of different levels, but I would say overall, if this is going to hold, it may, but I would wait for a decent sweep, change of character, and then go for those continuations. Another thing that we want to see is that right below our Asia session we have a daily open, so price may want to revert back to that daily open as well, which would kind of align with our idea of price coming back to sweep. So we have daily open as well, and we also know that we are already trading above our Friday's highs. We also know that today's open is also weekly open, and yeah, everything's showing us an uptrend at the moment. Obviously, we are back into this supply there, but we also know, even from the daily perspective, that this supply is filled with liquidity. From daily perspective, look, we have equal highs here, so this is filled with liquidity. Yes, we had a reaction, of course, but overall, we may see the next stop somewhere around here. Overall, let's just, you know, recap from this high to this low. Price came back into the premium, into this wick, which potentially was a flip on lower time frames, but not into the extreme of the point of interest. So here as well, that is then also filled with liquidity. So this is my reaction area again. And then further, we may actually see something here because that was actually unmitigated from this high to this low. We have lack of mitigation. So then somewhere up here, we may actually see some price kind of turning around for longer period of time or exhausting, etc., etc. But anything here is just potential reaction zone. I'm not looking at it. I'm anticipating reaction, and reaction might be tradable for us, but I'm not anticipating for the price to, you know, turn around or anything like that. So at the moment, clearly buy bias. I want for the price to develop and to show me what he's going to do. Is he going to do a deeper pullback? Is he going to hold those Asia's lows and today's open? That today open also aligns with this, and even though this has been mitigated in terms of the leg, the point of interest wasn't. There is also daily open sitting at that level too, so you know, there might be something there when we are looking at it from that perspective, and we just have to wait to see how the price is going to develop. This reaction is nothing for me. It's not tradable. I'm not going to trade down. If I'm going to engage in anything, it is going to be buys, unless I notice that we have taken out our swing low or our today's open, and the price is going to start trending to the downside, to the pullback back to discount, which is fair enough. But overall, I just want to highlight to you that this is our swing low on 15 minutes. Swing low. And that this is our swing high, and that we are buy bias, and we are in line with 4H. Weekly and daily are bullish. Not efficient, but bullish. Daily may become efficient tonight. 4H is efficient. We have picked up orders from our extreme, and 15 minutes changed the sentiment as early as here, because it regained its efficiency after the minor break. However, all of this was filled with liquidity, and it was due to be taken out. The price took it out, and then here we had continuation buys, and obviously ideally we would want for the price to come back here. Now we don't have points of interest any sooner than this extreme, so let's see if on 1 minute we have any points of interest here, and if price regained its efficiency in some type of way. And what we can see that we have one big push to the upside, very small pullback, push to the upside, very small pullback, and then here we can see that potentially price regained its efficiency and moved then the price to the upside. So here, when price comes back into this 1 minute point of interest, we may actually see a reaction. Let's just bear in mind that it is a swing point in the market, meaning it's a higher low, meaning it is filled with liquidity as well, and we just have to pay attention to that. But if the price may not want to come back into the 15 minutes point of interest, into the extreme, what you may do is sweep those 1 minute areas, and then it will continue to move up. Basically what happened here, that we swept this 1 minute area, picked up orders from the premium, they did not come back into the point of interest, and then moved the price down. Now in terms of me, I would prefer for the price to come back into 15 minutes, because otherwise to me this just looks like liquidity, but it would make sense. So sometimes when you want to give it a shot, it would make sense to give it a shot, but I would wait for some kind of sweeps, etc. Here, to me, I did never participate in those sales that did just not align with my trading plan, because yes, he was in premium of the 15 minute leg, but because we were coming back from the 4H point of interest and we were just filling up with liquidity, I did not feel like sales were actually a good idea. I wanted to buy back to points of interest. Those who sold from here, because they were like, well, it is in a premium, yes, it's not in a 15 minutes point of interest, but I'm willing to take it. That's absolutely fine. There will be those variations in between trading ideas, which is natural, and it's okay. So now this is what we are waiting for. Now wondering if anyone has any questions, anything to add, anything to ask, please let me know. If not, I will briefly look at GBP USD as well to see how it aligns. Okay, so I'll just look at that. And all right, so what we are seeing on GBP USD is that we had a few different, so this was the low that took out this high. We had some point of interest there, and price reacted to this one. Okay, that's fine. So I'm just going to extend this demand. So it was not kind of, you know, as per what we have planned. Here we had price breaking the structure further to the downside because the order flow was efficient. And then we can see the change of that sentiment as well on 4H and the break of structure. Okay, that's fine. I can delete this, and as you can see, we had downside liquidity, which we took out, and we have upside liquidity, which we took out. Those supplies can be deleted now because they're no longer relevant to anything here. And we picked up more orders, broke the structure. We have the low and the high. All right, so we also have our 4H point of interest all the way down here. All of this here is liquidity. So again, I would be not looking to be trading from anything from there. This is where the price, so this is daily and 4H break of structure down, that's fine. This is where internally the price took out those lows. So then this was the swing, which was also taken. So yeah, I would not be looking to be trading from anything from here. I would be buy bias. And if anything, I would be looking on 4H, how the price is going to react into those regions, because here on 4H, we have open orders, but at the moment we are buy bias. In terms of 15 minutes, we have similar scenarios. We have 15 minutes point of interest here, then one below there, then the price regained its efficiency there. So this is our extreme on 15 minutes, I would say. Then we broke further. Yeah, this is not efficient. So this is our last where the price kind of became efficient. So we will see what the price does there. Everything is filled with liquidity down here as well. So I would be waiting for the sweeps too. I just want to see how the price develops. It could be, because obviously it was first non-farm payroll of the year. It could be that what we may see is that the price may be developing itself and kind of waiting to correct itself properly. So I just want to give it time, really. And if it means I'm not going to trade today, that's absolutely fine. I give Monday for the price to develop, do what it needs to do, and then put my orders in tomorrow. I'm cool with that, unless the price is going to be pretty clean and clear. That's also cool. I'm going to then go with that. But overall as well, what we can see is we have obviously that overall push, which already is highlighted here to the right. So now I'm going to also break it down a little, and I also have some areas there. Let's see what's there on 1 minute. And on 1 minute, we also have two zones that also may want to be swept. So we will obviously pay attention to that. And let's see. So similar scenario as it is on EURUSD, we have those two zones and that price may want to react to. Again, it's 1 minute zone, so obviously they're a lot weaker than 15 minutes, but you know, we will see what the price wants to do in terms of them. I'm just going to move this to the side so it's not in my way. This is moved to the side as well. So I just move it more here and like this. And then internally there, we regained efficiency there. And then we have price further, not coming back to discount, further breaking up. So this is where the orders would be open down here. If the price is to hold it, if the price is to take it out, then this is going to be change of our sentiment internally until price comes back into the discount. Now, in terms of Dixie, just as a quick confluence, we picked up more orders from the extreme here on daily and weekly. We are overall also trending down, so it's pretty much the same as it is on EURUSD. It's a mirror. So in terms of daily, we picked up more orders, and actually daily on, hold on, daily on here, is he efficient or not? So it's not efficient here, we know that. Then the price broke further these structures. Hold on. So I'm going to actually take this, borrow this. No. So here would be minor breakdown because it's not efficient. And then we had a pullback and then broke the structure again. And then, all right, so we are actually back at the swing high of daily, swing low, because we regained efficiency. Did we? No, because we didn't take the low. Nevertheless, 4H. This was on 4H. Yep, so similar scenario as well. On 4H, this was our swing high, so that makes sense. A lot of liquidity was sitting here. We picked up the orders from, so this is separate from this extreme, and now we also broke the structure down here, break of structure, down, and now similar scenario. So it all kind of aligns to be the same. And now we are waiting. So again, we're waiting for the price to develop. We don't really go into 15 minutes on Dixie. We're just looking at Dixie as conference on hourly to kind of align with the trading ideas that we have on EURUSD specifically. And here we have still space to come back. We may see some stronger reactions because I think those zones there are open with some orders, so we may see stronger reactions. So we had the low, the high, pullback, and then points of interest. So I think this one is not going to be as strong actually, and this is the first reaction that is going to be a little bit stronger, which kind of aligns also with EURUSD, with a stronger reaction above here than anything else on daily. So let's just have a look. Not actually up here, but some reaction area there. Okay, fine. We just wait. We wait for London to open, and we see if there is any tradable opportunities during London. If there are, great. If there are not, then we wait for New York session. Any tradable opportunities, we take them. If they're not, fine, we move on to the next day. And really, with this strategy, if we score even 1 to 2 good trades per week and avoid unnecessary losses, that could account to, with minimal risk, to about 5%. 5% consistently per week adds up to a very nice number per month. And really, if you consistently could get 10% per month, you are sweet on any account, and you could really nicely compound. So anyway, we're going to talk a little bit more about compounding during our webinar this week, so as part of your development of your trading plan. So this is it, guys. I will catch you on Discord. Let's be patient, and I will speak to you soon. Take care, and I'll see you at the New York Open. Bye bye.